Okay, friends, it's been a while, but I'm back and let's talk about the markets. Okay, friends, let's take a look at the market. First of all, I appreciate you all being so patient with me. The reason why I went away, not because I'm afraid of talking about the markets, I'll never be afraid of that. It's because my third child was born, so I've been on paternity leave up until now. Now that I'm back, what I thought we would do is let's do a news catch up. And the reason why that's important is because so much of finance builds on what happened previously. And so we sort of need to pick the story back up right now for where we're at. So a lot has been going on. Let's take stock of it all. First up, let's take a look at the market. This is the same way we've always looked at it. Red is the S&P 500. Orange is the 50-day moving average. Purple is the 200-day moving average. And what do you notice? Well, after the news panic that was Liberation Day and the tariffs, since then Trump has been walking back a lot of the most painful parts of that, and the market has been responding resoundingly to the positive. If you look at where we are today as of right now, we're within 1% to 2% of all-time highs. And certainly at the very worst of Liberation Day, when we were in that meltdown, the market was down 15%, I think, on a year-to-date basis. Surely it seemed impossible that we would ever get back here, and certainly get back here as quickly as we did. But this is one of those things that I think is very normal for a Trump presidency. You get very sharp V's and you get very sharp peaks. So there's a lot of volatility either way. It's a roller coaster ride. You just got to ride it. From here, market looks good. We're significantly above the 200-day. So what this looks like, this wasn't a test. This was a breakdown, news panic. It was something different than that. But every day above the 200-day moving average makes the trend stronger, makes it seem more like the market wants to go up, and things look really good. Next thing I'd be looking for on the charts as a positive is when the 50-day crosses back over the 200-day. And pretty much that's a guarantee at this point in time, although there's very rarely ever guarantees in finance. But I think that one's coming. It's coming in a couple weeks. So things look good. Chart looks great. I think the market wants to go higher and trend higher. So let's talk about some news events here for a little bit. There's some that don't matter, and there's some that actually really do matter. So we're going to start from the ones that don't matter, and then we're going to finish on the ones that really do matter. Let's talk about the situation out in LA. So riots, protests, civil unrest, it's not good. No one wants to see this sort of stuff on the news. No one wants to see crackdowns. No one wants to see National Guard getting mobilized in the United States. But does this have any economic impact? No, not really. So this one can be completely discarded. It's a political issue, maybe a humanitarian issue as well. But is it an economic issue? No. Speaking of political and humanitarian issues not being economic issues, let's talk about Israel and Iran. So Israel struck Iran basically last night and continuing into today. The market, for the most part, is taking it in stride, although we have a little bit of weakness today, but nothing like we would have seen previously. I think the market has sort of figured out, Israel and Iran have been taking shots at each other one way or another for a little bit of time now. And the market has, in some ways, sort of built up some scar tissue. It knows that these are basically non-economic events. Of course, we'll be watching the Strait of Hormuz for oil disruptions there. We'll watch, the Iranian response. But for the most part, this is a non-economic factor as well. So riots and protesting, really not meaningful to the market. Israel and Iran, wars in the Middle East, really not meaningful to the market, assuming we don't blow up the oil supply. So these two, I think, for the most part, they're big news events, but they can pretty much be discarded if you're looking at the stock market. Some of the things that I think are moving the stock market. This is Trump. Our deal with China is done, subject to final approval. So there's a little bit of a hedge clause there. But I think this is what the market has been keying off of, just an end to the trade fight, an end to this trade war. But it's not really an end. It's just an end of the beginning, I would say. China has agreed to release rare earths. That's good. We need them, particularly for automotives. But they're only doing so for the next 6 months. So we're just kind of like delaying, kicking the can down the road. And I think we're going to do this, probably all the way through Trump's term. So there's going to be sort of a tenuous trade situation. But this is unambiguously positive, and we got it. Another one that's unambiguously positive, and by the way, tariffs in the trade war, that is economically sensitive, so that's one of the reasons why the market's going up. Another one that is economically sensitive, and another reason why the market is going up, inflation has been ice cold. Unbelievable readouts coming through in inflation. There was all this thought about, maybe the tariffs would spike inflation, maybe there'd be some price gouging. We're not seeing any of that. In fact, for the most part, businesses are just eating the tariffs in their margins, which you have to give it to him. Trump said that was part of the plan. So this is unbelievable, really ice cold. Blue here, this is all items. This is headline CPI 2.4 or below. So this matches some of the best data we ever got out of the Biden administration. And if we look at all items less food and energy, so this is core CPI, what the Federal Reserve actually looks at, this is new territory, at least in the post-pandemic, post-inflation era. Below 3%, 2.8, coming really close to the Fed's mandate. Looks really good. The Fed is meeting next week. If they don't cut based upon this data, that means some bad things. It means that they're, probably more political than they let on, which, the cat's out of the bag. They are a political organization. Everyone is. That's the point of being in a polarized society. Everybody is political. There's no one that's neutral anymore, but this is really good data. No reason for them not to cut. Even this tariff thing, we're already starting to see businesses eating it in margin. I don't think tariffs are going to be a reason to not cut, because they've also said that if we did get an inflation spike on tariffs, they would view it as transitory and not the sustainable sort of too much money chasing too few goods that cause inflation. So all eyes are going to be on the Fed. I hope for their sake they cut, because there really isn't a case not to, with inflation running as ice cold as it is. So what does it all mean on our news catch up? Well, a lot of news has happened during my hiatus. The good news is very little of it is actionable. The geopolitical stuff, protests and warfare, probably won't derail this market. The economic stuff, tariffs, trade deals, and ice cold inflation probably can help support this market. So I actually view us on some pretty solid ground right now in the market. Q2 earnings season should be a litmus test for the economy, but I am expecting robust earnings with some caveats. So if you are in the tariff zone, so if you work with aluminum, if you work with steel, if you work with agricultural products, particularly bananas and coffee, you're going to get hit pretty hard on your Q2 earnings. That's a small fraction of the overall economy. What I really think is going to happen is I think Q2 earnings are going to be pretty strong, and that's what's going to take us to all-time high and then beyond. So that's not a story until after we get through June, but I think the early data is starting to come in that we've got a very robust economy. Things are pretty strong right now, and a lot of things, trade deals, inflation, etc., are just going our way. So there you go. The good news is, while I've been away, things have been good, and I'll catch you next week for the markets review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.